Hey, don't click away just yet, as lots of movements happening this week in the stock market, and I want to tell you all about it. Now, investors from Robinhood and other commission-free apps are now collectively known as the retail investors or Robinhood investors, even though they are still considered a relatively small percentage in terms of holdings compared to institutional investors. No doubt that retail investors are making hedge fund managers scratching their heads all the time. So today, let's take a look at what these Robinhood investors are buying and selling this week, and I'll tell you whether you should buy, hold, or sell these stocks in the coming days. And with that said, let's get this video started. Hey, if this is your first time watching a video from this channel, then please consider subscribing, as I go through weekly topics ranging from personal finance to investments, and I typically upload 2 to 3 videos a week to keep you up to date to the market. In this video, I will show you 10 stocks that Robinhood investors have bought the most and as well as sold the most. With that said, let's check out what the shopping spree is all about this week. But keep in mind that this is a list of most bought stocks by Robinhood investors. They don't necessarily mean good or bad, but that's why I'm here to comment on the buying or selling decision. So here we go. Alright, so at number 10 is Panasonic. The company has secured a 3-year deal with Tesla to supply batteries to this electrical vehicle manufacturer. Now, we can all agree that Tesla is the frontier of electrical vehicles. So by securing such a deal with such an impactful, forward-looking company is huge. Panasonic had an overall positive week. At one point, it was even 10% higher than at the beginning of the week, but has come back down since, along with the general market and the S&P 500. I think this stock is a buy for long term and hold for the short and medium term. There's just so much potential for this company. Next at number 9 is Topships. It's a company that owns and operates petroleum-carrying tanker vessels. I have no idea why Robinhood investors are still interested in this, but the main reason is because it's a penny stock and highly reactive to speculations. And apparently, people like short selling this stock. If you have some extra cash ready to be burned, then go ahead. Otherwise, there is no reason to own this stock. So my position of this stock is to sell. Next at number 8 is Disney. I have made a separate video a few days ago talking about the top 10 stocks to buy for the near future. And one of the stocks I recommended is Disney. So feel free to go check it out. But just gonna briefly touch on it. Disney has always been a great stock to own for investors as far as entertainment goes. With the world adapting to the new norm in the post-pandemic era, entertainment will start to come back. And let's not forget that the company's own streaming service, Disney Plus, is constantly bringing in revenue even during the lockdown. So it is safe to get this stock while it is still sort of affordable, and my position for this stock is to buy for the long term and hold for the short and medium term. Next at number 7 is Ford. The company is finally adapting to technological change by producing hands-free vehicle, starting in 2021, 6 years after Tesla did. Well, it is better late than never. With the news of rising demand in the retail sector and easing of economic lockdown, it's just a matter of time when people will start buying vehicles again. And let's not forget that its F-150 is one of America's best-selling vehicles. I think the future of Ford is still quite optimistic, so my position on Ford is to buy. And number 6 is Broadway Financial. It is a financial institution that is led by African American leaders and serving mainly the African American communities. I think it's a great thing to do to invest more in minority institutions, and driven by the whole Black Lives Matter movements and Juneteenth, more people are encouraged to invest in companies that are color-centric. From a forward-looking perspective, if you have bought some shares last week, hold on to them. But if you miss the opportunity, wait for it to come down a little before your long position. But I highly discourage investors to use stocks like Broadway Financial to speculate or short-term tradings from a business perspective as well as ethical perspective. Moving on to number 5, and that's Tesla. I briefly mentioned Tesla earlier that it has just signed a deal with Panasonic. But the most exciting thing we can look forward to is their future-looking semi-truck and trailers. Tesla has the vision to revolutionize the entire long-haul trucking industry in the world, especially in North America. Imagine not needing any more drivers to the long-haul freight business. That would increase cost efficiency by a whole lot. With this vision in mind, it is a stock that you can own for a long time, but with the recent record high, you may consider waiting just a few days to look for an entry point. But regardless, my position for Tesla is to buy. There's just so much more room for growth in its future. Next at number 4 is a really boring stock, Amazon. I say it's boring because it is simply one of the best company out there. It is pandemic proof, it's the future of retail shopping, an ever expanding company. You can't go wrong. Just be aware of its high price, really high. You may want to use apps that allows you to buy fractional shares, so you don't have to pay like $2,600 for one share. Nothing much to talk about Amazon otherwise, my position is to buy. Next up at number 3 is Apple. Similar to Amazon, a very well-run company, and with its Worldwide Developer Conference next week, expect to see its price to go up once again. Apple products are almost seen as consumer staples nowadays, that its ecosystem is so deeply embedded into our lives. I don't see many existing Apple users leaving the ecosystem, but I do expect to see more market share being taken by Apple. So my position for Apple is to buy. Next at number 2 is Ideanomics. It's a company that provides financial technology solutions as well as electrical vehicle service solutions. It signed deals after deals with companies in China recently. You can expect this company to grow exponentially in the future. But a word of caution though, it is still considered as a penny stock. As of making of this video, it's around $2, so expect to see lots of volatility. But my position is to buy with caution. And lastly, the number 1 stock Robinhood investors are buying this week is Urban One. It is a communication media conglomerate that is established by and for African American communities. It has 2 classes of shares, U1 and U1K. U1 has voting rights while U1K does not. For growth purpose, U1 is better suited because it has less stocks in the market, so there is a limited supply. The share prices of these stocks were ramped up by the whole Black Lives Matter movements and Juneteenth, similar to the reason given to Broadway Financial. But since racial issues have been such a huge topic leading to the election at the end of this year, I think Urban One, as a media company, will benefit from this more than Broadway Financial. So my position for Urban One is to buy, but buy the one with voting rights, as it seems to have more growing potential from the investor perspective. But the same word of caution applies. It is not suited for short-term trading from both business and ethical perspective. Alright, now that we've mentioned the top 10 stocks investors are buying this week, let's take a look at the top 10 stocks they are selling. I will go a little faster here though. Number 10 is Fizzling Technology. It's a communication company that focuses outside of North America. It has recently signed deals to provide equipment for broadcasting major sports events around the world. It is a penny stock, so it's highly volatile. And looking at its history, I don't think it's a growing stock. So my position is to sell. Number 9 is Express Spa. If you recall seeing those back massage stores in the airports, chances are they are operated under Express Spa. The company has signed deals to offer their locations for COVID testing locations in the airport. So it's good for the company to not needing to close down their facilities. If you have the stocks, keep them. But I don't see what they're doing to be a long-term solution and prospect for the company as of now. Number 8 is Novavax, a pharmaceutical company that also plays a role in the development of vaccines. I don't know why people are selling these stocks because it looks pretty promising along with other vaccine developing stocks. My guess is that people are now taking the profit. After all, it is at an all-time high right now. My take on this is to keep the stocks, but look for dips to buy more if you see one. Number 7 is Vroom, an e-commerce company that specializes in trading of vehicles in the US. It is an IPO stock in the beginning of June. The stock has not really moved much, and I personally am not sure how likely people want to buy a car without actually seeing it. Buying a car is not a small amount, so I have my reservations with the business model of this company. So I'm gonna say Vroom is a sell. Number 6 is Jiaying, a Chinese company that connects individual investors and borrowers in China. And based on the stock prices, it has a mild downward tendency. So from that standpoint, I'm gonna say it's a sell. Next at number 5, we have Cinedigm, a company that distributes independent movies and TV shows. It has some good news recently, but overall, I don't think it's an exciting stock to own, and the stock prices has since come back down a little. And I think it's a good selling opportunity also. So yeah, it's a sell. And number 4 is Chesapeake Energy. Oil industry has not been doing well for the past few years and will continue to be so. So if you own any energy stock, might as well keep it. You never know. But I won't tell people to buy for sure. So hold it, if not, sell it. Number 3 is IZEA, a company that connects marketers and content creators. I think the content creation industry is getting bigger for sure. There are more and more YouTubers out there, but I think only semi-established, if not established content creators will be able to afford to get marketers to help expand a business. And most early-stage content creators often exit the industry altogether. And the content creator industry is getting very competitive. I definitely see some growth in the industry, but looking at the movement and the history of this company's stock price, I will have to say to sell. Number 2 is Innovio, another pharmaceutical company. There's no reason to sell this kind of stock if you don't have to, unless you want to take out some of the profits. As far as I can see now, it is a good stock to buy. And finally, at number 1, the stock that investors in Robinhood are selling the most in this week is Hertz. Congratulations everyone, you have finally woken up. Hertz is a bankrupt company. There's no reason to buy stocks from a bankrupt company unless you're just day trading it, which I know most people who owns this stock do. Anyway, it's time for you guys to let this stock go. As of now, there are still around 160,000 of you are still keeping this stock. If you don't care about the money you have already put into Hertz, you might as well keep them. But if you want to just get back something, then for everyone's sake, please sell the stock. Alright, that's it for the top 10 stocks Robinhood investors are buying and selling this week. Stay tuned to next week and see what retail investors are doing. And with that, thanks so much for watching and peace out.